Let's talk about auditing the financing cycle. Here we go. Well, we're talking about segregation of duties, separating out authorization, custody, and record keeping. We want to examine the segregation of responsibilities between the finance and accounting departments. Finance is authorization, accounting is record keeping, making sure that those two are separate. We want to confirm the existence of an adequate authorization system for incurring debt and issuing equity, making sure that's obviously properly authorized. Ensuring the accuracy of debt and equity documents. There should be a document for every step along the way. Make sure you understand those. Verifying that the company is not exceeding its debt limits. That could be a concern. Reviewing the terms of contracts and loan documents. Also, just making sure the company is not getting into any high interest debt that is above the risk tolerance of the company. Lastly, evaluating the financial institution or broker which issues the client's debt and equity and other third-party relationships. Here are some general audit testing procedures that the auditor would conduct in terms of debt. Now, this is just debt specifically. You're going to compare interest expense with the listed bonds payable amount for reasonableness. As I mentioned, you're not going to have zero interest expense if you've got $10 million of bonds payable. Now, if it's not interest bearing bonds, that's another story. But generally speaking, if you've got debt, you're going to have interest. Investigating any unusual fluctuations in interest expense. If you have fluctuations in interest expense, that might mean you paid down a lot of debt or you accumulated a lot more debt. Reviewing debt agreements for restrictions on the use of short-term debt. Any long-term debt agreements may say that you can't use any short-term debt because short-term debt is risky. Checking whether any bond payable have been prepaid or retired. Ensuring that debt repayment is up to date, making sure that they're paying the bills. Verifying that debt is properly classified as current, short-term, or long-term. And lastly, reviewing the company's debt covenants for compliance. We got all those nice little ratios we talked about in data analytics and in our analytical procedures, making sure that we are not breaching any debt covenants. For existence, when it comes to debt, again, still dealing with just debt, we're going to utilize confirmations with third parties. Any institution that we believe our client may be getting debt through, we're going to reach out to them. And reviewing board minutes and inspecting agreements. Completeness, making sure that all transactions related to debt are included in the financial statements. We're going to examine note and bond agreements. We're going to review interest expense payments and examine any lease agreements because leases can be debt related, bonds, notes, anything like that. Those are all going to be debt related. For occurrence, we're going to utilize confirmations with third parties again, and also review board minutes and inspect any agreements. For valuation, allocation, and accuracy, we want to examine any new debt agreements, making sure that everything's properly stated, do a nice little recalculation, recomputing interest payable and amortization, and also testing debt receipts and payments, and comparing interest expense to the debt balance for reasonableness. All great possible tests. We're flying through these here. Pretty much one procedure for each instance. For the rights and obligations, examine those note and bond agreements. Let's look through the documents, make sure that anything that is possibly a liability in the future is properly stated, and any assets we have are properly stated as well. For cutoff, you want to review the debt activity before and after year end to make sure that anything related to interest expense, interest payable, as well as our debt balance is in the proper period. For presentation and disclosure, you want to examine any debt due dates for proper classification between short-term and long-term. That's going to be, like I said, very important. You want to make sure that those are properly classified. And how do you determine that? Well, you just look at the due dates. Here are going to be general auditing procedures for equity when we get to stock, issuing stock and issuing certificates to raise money through equity. We want to trace corporate stock issuances and treasury stock transactions to board of director meeting minutes. Now, this is also something we talked about with debt. You want to make sure it was properly approved, ensure that these were voted on and authorized. And we also want to analyze the retained earnings account from inception or last audit. We want to make sure that retained earnings and just generally all the equity accounts are properly stated. For existence, if the client does not maintain its own stock records, right, you could be just like when you're buying stock through an investment, like we talked about, you could be using Fidelity, Vanguard, something like that, third party. You want to make sure that if they don't maintain their own stock records, they just outsource this to someone else. You obtain written confirmation from the transfer agent or the registrar. These are individuals who would be in charge of this instead of the client. On the number of the client's shares issued and outstanding. You want to review the minutes of these shareholders' meetings to help verify the existence of this, and then examine the client's financial statements to ensure the accuracy of the reported balance. Lastly, we want to verify that the company has issued stock certificates to shareholders, which is a check that the stock actually does exist. That's a great way to verify it. For completeness, how are we going to verify completeness? We want to send confirmations and examine any stock certificates, make sure that any stock that actually does exist is properly included. We want to foot the shares outstanding and agree to the general ledger. We want to examine treasury stock and agree to the general ledger. And then we also want to ensure that any required disclosures are included for equity. Occurrence for equity, we want to vouch transaction records to the board minutes, making sure, hey, you sold a bunch of shares. Where was that talked about in the board minutes? And then sending confirmations and examining stock certificates again. Valuation, allocation, and accuracy, we can recompute the values assigned to stock transactions, just looking at all the numbers, making sure that the dollar amounts add up, and also analyze the retained earnings account from inception or last audit. And again, with this, just say all the equity accounts, making sure that you understand what's going on there and that they're properly stated. For presentation and classifications, you want to determine if there are any restrictions on retained earnings from loans or agreements. You also want to see, well, a lot of times we might see with subsequent events, should you state or account for any massive issuances of stock that happened in the first quarter of the next year? Now, that's not something we accrue for in the previous year, that is only accrued for in the year that it happened. But you want to make sure that if, let's say, we're in year one and the second day of year two, this entity issues a massive amount of stock, that may have to be disclosed. It doesn't have to be accrued for yet, but that just may have to be disclosed in the financial statements. For the financing cycle, overall debt and equity, we've got a couple departments. Accounting department, this is going to be the individuals that tracks the financial performance of the company. They prepare the financial statements and records transactions. Financial planning department, they create and maintain financial models to determine the company's current and future financial position. The legal department is going to review and draft contracts related to debt and equity financing. Definitely a lot of legal possibilities with this. Treasury department is going to manage the company's cash flow and liquidity and negotiate any loan agreements. We have an investment banking department, and any of these may be outsourced. But they're going to arrange debt and equity financing from investors, banks, and other sources of capital. You're also going to have an investor relations department. This is going to manage relationships with investors and communicate the company's financial performance. You're going to have you may see this if you have stock in any company. You may logged into a company's investor portal, something like that. And lastly, the compliance department is going to ensure that the company complies with all relevant laws and regulations related to debt and equity financing. Now, before we wrap it up and call it a day here with our inventory, investment, PP&E, personnel, all these cycles, we want to just take another look. Here are our items, our pieces of evidence, and here's the source and the use. Again, we went over this in the previous lesson. Not going to go over it too much more in depth here. Take a look, make sure you're familiar with all of these and understand where they all fit into place. That being said, I'm going to wrap it up with a nice summary. Had a good time here. A lot of important information and just example after example. Really drilling this in, making sure that you're good to go. Let's wrap it up and call it a day. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.